Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 top analyst strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks with recent buy ratings from some of Wall Street's very best. We found these stocks under Tip Ranks' top analyst stocks. Found right at the top of the Ideas menu, here you'll find a collection of stocks that have recently picked up ratings from 5-star analysts. We narrowed in on the strong buy rating to get a list of companies down below. You can check out these top analyst stocks on the Tip Ranks website or right on the mobile app, which you can download using links in the description down below. Today, we're going to take a look at these companies, what it is that they do, and of course, what those Wall Street analysts are predicting for the stock's future. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into our top analyst stocks. First up, we're taking a look at MasTex. They trade under the ticker MTZ, currently priced at $179. They've gained about 70% in this past year, and in the last 3 months are up 18%. MasTex is a leading American infrastructure construction company headquartered in Florida. With over 90 years of experience, MasTex specializes in engineering, building, installing, maintaining, and upgrading critical infrastructure across multiple sectors, primarily in North America. They serve a diverse range of industries, including communications, energy, utilities, and government, and are known for their role in large-scale, complex projects. Their most recent earnings report just came out on July 30th. The company saw both an earnings and revenue beat, plus an increase to their future guidance. Revenue of $3.55 billion grew by about 20% year over year. The company also had record company backlog increasing by 23% and increased both their revenue and earnings per share guidance for 2025. They're predicting a 60% increase at the midpoint of their earnings per share year over year. We have seen several 5-star analysts weigh in on the stock following that earnings report, including 2 5-star analysts from Stifel and D.A. Davidson. The analyst at Stifel noted that the Q3 guidance was above expectations and 2025 guidance was broadly raised. They viewed the post-earnings dip as a buying opportunity, while the analyst at D.A. Davidson said that the company's broader business momentum is evident, with expectations for further backlog gains and that they are positive on their leverage for today's energy conundrum, as well as their capabilities to support the enhancement of data communications. With 14 current analyst ratings, the MasTex stock does come in as a unanimous strong buy. The average price target is $202, implying an upside potential of about 13% from current prices. Looking at those price targets down below, you can see quite a few analysts bumping up their price targets following that earnings report, ranging from an upside of 7% up to 22%. For our second stock today, we're looking at Docebo. They trade under the ticker DCBO, currently priced at $31 per share. The stock did sell off earlier in the year, dropping 27%, but in the last 3 months it has climbed back 18%. Docebo is a Canadian software company specializing in artificial intelligence-powered learning management systems, or LMS. They provide a cloud-based software-as-a-service platform called Docebo Learn, designed to deliver personalized, scalable, and engaging learning experiences for employees, partners, customers, and other stakeholders. They serve over 3,900 customers in more than 90 countries, with a focus on mid-market and enterprise organizations across industries like technology, financial services, healthcare, and government. As you saw on their chart, the stock has faced some headwinds this past year. They did lower their future guidance amid some uncertain macroeconomic conditions, and one of their major clients, Amazon Web Services, did decide to not renew their contract. But in their latest report that just came out on August 8th, they did see an earnings and revenue beat. Earnings per share of 29 cents came in 8 cents ahead of analysts' expectations, while revenue of $60.7 million beat by nearly $2 million and grew over 14% year over year. Their annual recurring revenue has grown to $225 million, and they did receive ATO status here in the US, which unlocks opportunities to bid and win contracts in the government sector. And the company said they're investing with focus, advancing their AI-first strategy. Following that earnings report, we have had several analysts weigh in, including one 5-star analyst from Canaccord Genuity, who just increased their price target on the stock today. They said Docebo reported an excellent quarter with better than expected Q2 results and guidance. With more confidence on the macro after tariff-induced uncertainty, albeit still with caution amid longer sales cycles and deal scrutiny, management also bumped the full-year guidance. The stock comes in as a strong buy based on 9 current analyst ratings with 7 buys and 2 holds. The average price target of $38 implies an upside potential of over 20%. Looking at those recent price targets down below, on the low end we do of course have a hold back in May with an upside of 3%. More recent price targets looking a bit more bullish, a high-end price target with an upside of 45% from Canaccord. If you've made it all the way to our third stock today, then this is a reminder to make sure you've hit that thumbs up button. Last on our list, we're taking a look at Aecom Technology. They trade under the ticker ACM, currently priced at $119 per share. Their stock is up about 25% in this past year and has gained 11% in the last 3 months. Aecom is a global infrastructure consulting firm based out of Texas. They provide a comprehensive suite of professional services across the entire project lifecycle, from planning and design to engineering, project management, and construction management. With over 50,000 employees and operations in over 150 countries, Aecom delivers innovative and sustainable solutions for complex infrastructure challenges in sectors like transportation, water, energy, environment, and buildings. They also recently shared their quarterly results last week on August 5th. Now, they did come out with some mixed results, an earnings beat but a revenue miss. But they did also increase their future guidance and saw their backlog hit an all-time high. Earnings per share of $1.34 beat expectations by 8 cents per share. And while revenue of $4.18 billion did miss by just $150 million, the company achieved record levels for NSR, margins, EBITDA, earnings per share, backlog, and pipeline. And with that, they raised their annual financial guidance for the 3rd consecutive time. And I'm sure you guys have figured out the pattern by now. Following a strong earnings report, we see a lot of analysts weighing in, including several increasing their price targets. One analyst at Truist said that Aecom has demonstrated solid performance in 2025 despite a challenged macro, while its backlog growth supports the ability to deliver on financial targets. Another analyst from UBS said that Aecom is executing well, and while it's still early, they appear set to deliver a strong fiscal 2026 with strong top-line growth and margin expansion. With 8 current analyst ratings, Aecom does come in as a unanimous strong buy. The average price target of $133 implies an upside potential of 12%. Looking down below, once again, a lot of analysts recently increasing their price target on the stock. They range from an upside of 4% up to over 18%. So that is a quick look at 3 strong buy stocks, all with recent buy ratings from 5-star analysts. Let me know your thoughts on these companies and if they were on your radar or not before in the comments down below. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.